Good morning and welcome back to Your Financial Independence, where we're always trying to grow your financial independence. So today I got my number one solar play, and it doesn't have to do with solar panels or battery modules either. And with this, if you want daily stock market news, stock overviews, earnings reports, we have that here all day, every single day, Monday through Friday. Basically any days the stock market's open, I'm going to be posting a video. So if you don't mind, subscribe, comment, and leave a like on the video. Help grow this small channel, and I appreciate you. So you may be asking yourself, if this is a solar play, but they don't have battery modules or solar panels, what are they? Well, to sum it all up, this is the tracking systems that's installed in solar farms, and they're actually the biggest provider of solar tracking systems. So without further ado, because I know you are busy people, I'm going to try to keep this video nice and short. Ticker symbol ARRY. This is ARRY Technologies. So get into some recent news about the stock. They actually got rewarded a 4 gigawatt tracker system contract that just got put ink on the paper on the 26th of April. So that's going to be bringing in a lot of revenues. So now let's get into the stock itself. So let's go into the business overview. Technology company with a different product. Leading manufacturer of tracking systems for utility solar energy projects. Tracking systems technology enables 25% more energy production than fixed tilt, which a fixed tilt is basically where the manufacturer goes in there and they will put it at like a 40-degree offset, whereas this can actually rotate on its axis and track the sun the whole time. So serving a large and growing market, more than 1 in every 4 solar modules installed to date is an ARRY product. So huge corporation. Tracking demand is growing 20% faster than the overall solar market. So 20% faster than all these solar panels, like in-phase energy, their battery modules and inverters and stuff like that. And so this delivers strong financial results, double-digit top-line growth, 16% EBITDA margins, revenue for 2019, $648 million, to 2020, $873 million, adjusted EBITDA from 2019 of $122 to 2020 to $161 million. So as I previously stated, you can see over here to the left of the screen, you have the actual ARRY tracking systems, and then how I was saying the fixed tilt, not an ARRY product, which they don't offer. This is a mounting system that has no moving parts and it's fixed at a certain angle. That way basically you'll be getting sunlight and then you'll get peak sunlight, and then thereafter it's kind of just like not full beam, like it's not aligned perfectly with the sun. So with their tracking system, this delivers a 25% energy gain for a 7% increase in project capital costs. So with electricity, I'm sure if y'all looked on y'all's electricity bill, you can see that the electricity rate per hour widens and goes a lot higher in the evening. That's because everybody's coming home from work. For the majority, you have some weirdos like me that work night shift, but so they'll be turning on their ACs, there'll be dishwashers on, maybe the laundry dryers on, TVs on, ceiling fans. So that's why you have electricity more expensive in the evening. And then this broadens, if you look to the right of this chart, this broadens the whole entire spectrum of when you're getting sunlight. So this goes into their industry leading tracking system here. So lower capex, fewer number of components. This is because the more components you have, more issues with stuff messing up. So this is what I really love. Less than 1 motor per megawatt, and a megawatt's 1,000,000 watts. Over 190 times fewer components than the nearest competitor. So the nearest competitor has 190 times as many parts. So a lot less things to go wrong with this product. That's why it's in such high demand, and a lot of people, like I just showed y'all, they're signing contracts every day. So greatest site design flexibility, up to a 40-degree offset. Something that's really awesome is you can have a 26% grade, which is basically like if you think of a mountain, the peak over here, this downhill, this is the grade. So how steep is it going up or down? And that's from north to south directions. Highest power density, 100 plus modules per row, 32 rows per tracking block. Machine learning software, so you can learn like if the trees are getting in the way, well, oh, maybe we need to have these come up faster, a little bit ahead of the sunlight. Zero scheduled maintenance. Industry grade components, maintenance free motors and gears, 31% lower operation and maintenance cost. So we previously covered the revenue growth already, so I'll just say 35% from 2019-2020. Net income for 2019, $40 million. This is a 49% increase of this, or 2020, to $59 million. Already went over adjusted EBITDA, that's 32% growth year over year. Adjusted net income is 40%. From 2019, $80 million to 2020, $112 million bottom line. So now to take a quick look at some of the market growth and the acceleration that we're going to start seeing. All of these are estimates, but for 2021, we're going to be looking at about a 34% growth, and this is old and new forecast. For 2022, it's 31%. 2023 is 27%. So we're only going to need more and more solar, especially with the policymakers that are in office now. We're looking to be the first green country, renewable, leading the way in renewable energies. So IHS estimates for U.S. solar installations from 2021 through 2023 has increased over 30%. And I think they're sandbagging these numbers a little bit, because here in Arizona, I can see solar farms, solar installations on roof, everything's going solar. So to say about a 12% CAGR until 2023, I think they're sandbagging those numbers a little bit. I could see upwards of 15%. So I do agree with the 3 points that they made here. So I'm going to throw this in with the video. 3 simple reasons to invest in ARRY Technologies is to gain exposure in the largest part of the solar market. Number 2 comes in with a company that can grow faster than the market. Because we already stated that ARRY Technologies and solar tracking in general is growing 20% faster than the actual solar market itself. And number 3 comes in and delivers strong returns. So you're going to be looking at double-digit organic growth, strong EBITDA margins, high free cash flow conversion. Self-funding, no new equity capital, so they're not going to be diluting shareholder value. Multiple levers of accelerating growth, including acquisitions. So if you are thinking about investing in this company, or just something I want to throw out there in general, they already have the best solar tracking technology. What's stopping them? Just try to open your mind a little bit. What's stopping them from acquiring a solar play? They already have plenty of money on their balance sheet, which is what we're going to get into in a little bit. So ARRY Technologies is trading roughly about $30. It IPO'd, and man, it went to $55, I think. And so we're looking at about $30 now. So it's came down a very long way. So now I think is a very good time to buy in if I was investing. I haven't invested yet, but I'm looking very heavy into the company. So, the company market value has dropped about half. So this is a really good time to enter. You're looking at a market cap of $3.73 billion, which is still a small company, but a lot of growth ahead of it. And try to factor in some of these acquisitions. So they're saying it on the investor relations page, talking about, hey, we might start acquiring new companies. More than likely, they're going to start acquiring. For statistics, you are going to be getting this, like I said, a market cap of about $3.5 billion and a forward PE of 32.15, which is pretty low when you're looking at the solar market in general. It is still slightly expensive, but let's be honest with ourselves. What cheap stock is out there, that's producing revenue like they are? So going over their income statement on the financials a little bit, you're going to see the nice stepping stone with any kind of growth company or any kind of company that I believe is good in investing in. You're looking at about $290,000, and you're seeing that nice stepping stone growth. In 2019, $647,000, and then 2020 last year was $872,000, and all these numbers are in thousands, by the way. So one thing I am keeping an eye out for is the cost of revenue itself. So the cost of revenue is going up. I mean, they're still outpacing it with their revenue, but the cost of revenue, they're paying a pretty steep price. It's a profitable company, but I want to see them like get their cost of revenue like down a little bit, and then I want to see revenue continue to go up. That's why I haven't invested in them currently, but it's actually I'm considering it right now as just a value play. So they have a little bit more assets than all of their debt. For assets, we're looking at $656,000, and then total debt, everything is $428,000. So that leaves them like 230 something thousand assets over debt. So they have a decent balance sheet. It's definitely not that good, but it's doable. Okay. So with this, your financial independence investors, I hope this gave a good overview and made you look outside the scope of like solar companies, as in panels and in phase with like battery technology and stuff like that. So there's plenty of different sides of businesses to be looking into when you're looking at solar play or just green energy or renewable energy and all. So this is more of like a industry, like industrial type company. And like I previously stated, I am looking on their income statement and I want to see the cost of revenue come down. That's the only thing that's holding me back from investing. I want to see their quarterly results, and then after that, I'll either buy or won't buy, and I'll make a video on that. That way all of y'all know what I'm doing. Comment down below what's some stocks y'all want me to look at. Do you want me to give an overview of my investing account, like see how we're doing on that? If you're still in the video, please subscribe, like, comment. We get daily, every single day the market's open. I'm always uploading, whether we're talking about news, overviews of stocks, or earnings season, which is still in effect right now for Q1. And with this, I hope you have a great day.